Hey everyone, welcome back to Corporate Decoder. Today, Stellus Private Credit BDC just filed an 8K reporting an unregistered sale of equity securities, and I'm seeing a clear signal of growth funding that warrants a closer look. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals the company is raising substantial capital directly from investors, which tells us about their expansion plans and how they are funding them. Alright, let's dive into what Stellus Private Credit BDC has brought to us today. This is a Form 8K, which is essentially a report for significant events that shareholders should know about right away. It is like a news flash from a company. The date here is the 23rd of April 2026, but the actual event that triggered this filing happened a little earlier on the 17th of April 2026. This is the earliest event reported, meaning this is when the core action we are discussing took place. The company involved is Stellus Private Credit BDC. BDC stands for Business Development Company. Think of them as investment funds that provide capital to small and medium-sized businesses, often through loans or private equity. They are designed to provide investors with access to these types of investments, typically only available to large institutions. This filing also tells us the company is incorporated in Delaware. A lot of companies choose Delaware for their incorporation because of its business-friendly laws. Now, the main story here, the significant event they are reporting, is an unregistered sale of equity securities. Let's break that down. Equity securities means they sold ownership stakes in the company, in this case, common shares of beneficial interest. Unregistered means they did not go through the lengthy and expensive process of registering these shares with the Securities and Exchange Commission, or SEC like a typical initial public offering might. So, on the 17th of April, the company issued a notice to its investors. This notice was about drawing down capital, which means investors are being asked to put their money where their commitments are. They are selling 660,941 common shares of beneficial interest for a total of $10 million. This is a substantial amount of money being raised. An important detail is that they are not using underwriters. Underwriters are typically investment banks that help companies sell their securities to the public, and usually charge a fee, a percentage of the money raised. By not using them and selling directly to investors, the company is saving on those costs. This often indicates a more direct relationship between the company and its investors. The deal is expected to be finalized around May 1st, 2026. So, the money will be flowing in very soon. This sale isn't a random event. It is happening because of subscription agreements that are already in place. These are contracts between the company and its investors that lay out the terms of these capital calls. These agreements basically say that investors have committed a certain amount of money to the company, and the company can ask for that money or draw it down when it needs it for things like investments or operations. Investors need to provide at least 10 business days notice before they have to pay up. This ensures investors have some time to prepare their funds. Now, why is this sale unregistered? It is because it falls under specific exemptions in securities law, primarily Section 4, Add 2 of the Securities Act of 1933, and Regulation D. These rules allow companies to raise capital from a limited number of sophisticated investors without the heavy burden of a full registration. Typically, these investors are assumed to be able to fend for themselves and understand the risks involved. This is a common way for companies, especially private ones or those like BDCs with targeted investor bases, to raise funds efficiently. One interesting point is that Stellus Private Credit BDC identifies itself as an emerging growth company. This is a designation that allows newer, smaller companies to take advantage of certain benefits under the Jobs Act, like reduced reporting requirements for a period. It signals that the company is likely in a growth phase and is not yet a large established entity. And here we have the signatures. This confirms that the filing has been reviewed and authorized by the company's management. W. Todd Huskinson, who holds a trifecta of powerful roles, Chief Financial Officer, Chief Operating Officer, and Secretary, has signed off on this report. Having one person in all these key positions can sometimes indicate a lean, efficient management structure, but it also means a lot of responsibility rests on one individual. So, what does this $10 million capital raise tell us for a BDC like Stellus Private Credit? Raising capital is how they grow their investment portfolio. This $10 million will likely be deployed into new loans or investments in businesses aiming to generate returns for their investors. The fact that they are raising this money directly from their existing investors through these subscription agreements suggests a strong ongoing relationship and confidence from those investors in the company's strategy and management. It is a way for them to fuel their growth without diluting existing shareholders as much as a public offering might. The key takeaway here is that Stellus Private Credit BDC is actively seeking to expand its business. This unregistered offering is a straightforward way to bring in significant funds from investors who are already familiar with the company's model and likely have a defined investment thesis around BDCs. It is a sign of proactive management looking to seize investment opportunities. While the unregistered nature means detailed, financials aren't being drilled down into like a public offering. The sheer amount being raised signals serious intent to grow the asset base, and presumably the income derived from those assets. This kind of capital raise is pretty standard for BDCs. They often operate with committed capital from investors that they can draw down as needed. The success of these drawdowns speaks to the continued demand for the types of investments BDCs make, often in the private credit space, which has seen a lot of growth. The fact they are an emerging growth company could mean they are still in their earlier stages, and this capital is crucial for them to scale up their operations and investment activities. It's a positive sign that they are able to attract this level of funding from their investors. The absence of underwriting fees also means more of that $10 million directly goes to work for the company, which is efficient. My overall take is that this filing shows Stellus Private Credit BDC is in an active growth mode, leveraging its existing investor base to fund its expansion. The direct raise indicates a level of confidence from investors in the company's ability to deploy capital effectively and generate returns. The risks are inherent in any investment. But for a BDC, it often boils down to the quality of the underlying loans and investments they make. Without more detailed financial disclosures in this specific filing, it's hard to judge the specifics of their portfolio, but the capital raise itself is a signal of positive momentum and a commitment to growth. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.